Hi, and welcome to Wall Street Wrap Up, and hope your week went well. I'm Andre Laborde. Our goal is bringing Wall Street to your street for this Friday, February 19th, 2021. Our goal is to inform you of what happened in finance this week to get you better prepared for the events for next week. Well, coming up tonight, we'll be talking with a legend on Wall Street, Mario Gabelli. Mario is the founder and CEO of Gabelli Asset Management and the Gabelli Mutual Funds with over $49 billion of assets under management. Barron's has inducted Mario as one of their most influential mutual fund managers, and he's going to be with us tonight. But first, how did the markets do this week? Well, the Dow Jones closed this week at 31,494. That's up almost 0.8 of a point for the day and up almost over 0.2 of a point for the week. But the S&P 500 closed at 3,906, down 7 points for the day and down 0.2 of a point for the week. And the Nasdaq, they finished the week at 13,874, up 9 points for the day, but it was down 0.8 of a point for the week. Of the three indexes, the Dow, the S&P 500, and the Nasdaq, the S&P 500 and the Nasdaq closed lower for the week. Well, let's get to our guest tonight. Mario Gabelli, well, he's a legend on Wall Street. Since 1977, he's founder, CEO, and chairman of Gabelli Asset Management Company and Gameco Investors. His Gabelli Mutual Funds, since 1977, has generated annualized returns of 16.3% per year, and he's my guest tonight. Mario, welcome to the show.
Privileged to be here to talk about my favorite subject, the global capital markets and the U.S. in particular.
I totally understand. Well, speaking of that, Mario, how optimistic are you about 2021 when it comes to the stock market?
Well, you got to go back one giant step. Will the vaccine work? Will the variants prove the current dosages ineffective? How long will it work? The second part is fairly uncomplicated. Chairman Powell is keeping his foot on the accelerator, keeping monetary policy working and overtime. And obviously, it looks like we're going to have another round of fiscal stimulus, all of which will give a comfort to the American consumer. The U.S. household wealth is at an all-time high. And so as a result of that, I think the economy is going to do quite well. And in the second quarter, you'll see very easy comparisons. And as you go towards the end of the year, because the incumbents in the White House will want to have a very strong economy in the first half of 2022 for the midterm elections, we'll see a fairly sizable, let me repeat that, infrastructure bill, not only for the inland waterways, not only for the ports, not only for what's going down to Mississippi, but also for broadband, remote learning, remote work. We're going to have to bring that to rural America and to all Americans. Mm-hmm. So I'm pretty optimistic about the economy. Now, that's not the same as for the stock market.
Right. Well, in fact, I was watching Mohammed Al-Alarian on a recent business show, and he said that he's worried about two areas. One is an accident, a market accident or an international accident. And number two, speaking of what you were talking about was the Federal Reserve, was whether or not for interest rates or the possibility of maybe inflation occurring. Is that what you're talking about when it comes to the Federal Reserve?
Andre, it's very uncomplicated. We have earnings. We have earnings growth. We have operating profits. There's going to be some impact from PPE expenditures. You're seeing that in companies, but companies have also learned to cut costs. So independent of that, pre-tax margins should expand a little bit. Again, gross margin narrow. Then the question is the tax rate. What is the corporate tax rate going to be? We currently have a territorial tax. I can get into that if you care, versus global. I don't think they'll change that. But either way, it's a very good stock market to do certain things.
Well, from what I understand, about 2/3 of the fourth quarter's earnings, when you're talking about earnings, have been released, and about 80% of those are positive, have beaten estimates. So, and that's during the fourth quarter of last year. So now, as you mentioned before, with the vaccine coming into the marketplace, the first quarter of 2021 should be looking even better than fourth quarter?
Well, what happens is estimates are always been downgraded. If I'm the CEO of a company and I've got a lot of uncertainty, I'm not going to basically say things are going to be great. I'm going to hedge. And the analysts that follow it, the few that remain, they're basically going to say they beat their estimates or not. Okay. So you got a lot of pluses and minuses on that. We look at companies with a microscope and then also look at them with a telescope. For example, today, Dana Corporation had their earnings conference, Herc Rentals. These are two companies that we have significant positions in. And so that's what we do.
Mm-hmm. Do you like, Warren Buffett usually says he likes stocks that have toll bridges. In other words, something that other companies either are not as good at or have a niche above the others. When you look at a stock and analyze a stock or a company, do you look at the same thing or do you look at other metrics?
I started 1967. I started buying stocks in the Eisenhower administration when I was like 13. So I've gone through a lot of presidents. In terms of stocks, we have been following the auto industry now for 50 plus years. And over that period of time, change takes place. We have a conference in Las Vegas every year where we invited 30 or 40 companies and they present. And 3 years ago, we went to had people from Intel come down and talk about a certain type of cars in terms of autonomous driving. Then we went 2 years ago to look at what Carvana is doing in used cars. Then you look at today. Last year we started focusing on the entire energy infrastructure and EVs and battery power in particular. So things change. So if accumulated and compounded knowledge like Buffett has of certain industries, we have of certain industries. You watch anything anywhere in the world, Andre, anything on any device, any content, in theory, we follow, whether it's in Bombay or London or obviously Hollywood. The second part, I'll give you another easy example since where you're located right now. Whatever you drink, wine, water, beer, soda, and wherever you drink it, whether it's White Claw or Truly or some other type of beverage, we cover it. So we have 40 analysts. I allocate to them where we're going. Then you look at what companies are, how bad is bad in cyclicals, how long will it take to recover, and then when it's good, will the market pay a higher multiple? And so that's what we do. We've been doing that now for a long time.
Mario, one of the things you brought up just a moment ago was automobiles, and I know Genuine Auto Parts was one of your favorites just about a month and a half ago. I always read your annual Barron's roundtable. Do you still like Genuine Auto Parts?
About 1967, I would go to Atlanta to visit a company called Cox Broadcasting, a company called National Service Industries, a company called Rollins, and a company called Genuine Parts. And us as drivers of cars and those that do it yourself for me in terms of car repair, see the NAPA, NAPA sign. So Genuine Parts today is $100 a share. They have 145 million shares. That's a $14.5 billion market cap. And I think that, as you look into 2022, and you'll have a surge back in driving for the reasons that you talked about earlier, their business, they should generate close to $7 of earnings. And that's 2/3 of their business. The other third is selling parts for industrial equipment, and that'll do quite well.
Do you like Genuine better than, let's say, O'Reilly or AutoZone or Advance Auto Parts? I'm bringing up different competitors.
Yeah. You've got all the names. I'll give you an example. If I want to do it for myself, okay, do it yourself, DIY, I go into a AutoZone. 80% of AutoZone's business is what they call the DIY. Genuine Parts, 80% is the professional mechanic. So it's a car, and there's 250 million cars on the road in the United States, and there's a billion more in the rest of the world. Those are two distinct markets. And AutoZone has been a terrific company. They continue to do well. And O'Reilly is kind of halfway in the middle, and we own some for both of our clients, but we own a lot more Genuine Parts.
I understand. I know media stocks are a special area that you specialize as well as others in, and I know that you talked about recently on how News Corp, they sold the Murdoch family sold some of their assets to Disney and to other things. Do you still like News Corp?
Yeah, I reversed that, and
Okay.
let's see if I can give you the landscape. I started following Rupert Murdoch somewhere in the 1970s when he was trying to take over a company that we owned a lot of called Time Warner. And Herb Siegel of Chris Kraft helped him kind of diffuse that. Fast forward, Chris Kraft was sold to Fox. Fox then had a bunch of assets. They sold them to Disney. They kept the broadcasting part, and they kept some other elements. Fox is selling at $30 a share with 600 million shares. 600 times 30 is 18 billion. They've got about 3 or 4 billion of debt. So I'm paying $22 billion for the company. But the part that you have to like is sports. So if we get...
Now, Mario, this is News Corp we're talking about, right?
No, we're talking about 20th Century Fox. News Corp
20th
is the
Century. I'm
company
sorry.
that-
Okay. All right.
Right. No, that's fine. News Corp is the company that has content in Australia, content in England, and something called the Wall Street Journal.
Yes.
So we don't cover that as closely. We just follow the Fox company, and that's the one that voting stock is selling at about the same price as the lower vote. So we've encouraged clients to buy that along with Sinclair. But the other element that's very important, Andre, and you touched on it, was gambling. Mm-hmm. And you can see it in your backyard there in terms of casinos. But the casinos are also going online to permit gambling, and that is an element that Fox, through Fox Bet, Fox also has a piece of a company in England called that owns Flutter, and you've got obviously DraftKings and FanDuel in the U.S. that's visible, but there are a lot of other dynamics.
Now, Flutter Entertainment runs FanDuel. Do I have that right?
And Fox tried to buy a piece of the sports group in London that merged with Flutter. That in turn was the deal. But bottom line is that sports, we did have them, and they're coming back, and they're with limited capacity, but at an accelerating rate. And too bad the Knicks didn't get Dion.
Hold right there, Mario, because we're going to take a break. We'll be right back. We're talking with Mario Gabelli. He's the founder, the chairman of the board, and the CEO of Gabelli Asset Management, and also Gameco. We'll be right back in just a moment. Before we left, we were talking about sports betting, and we're talking about DraftKings, FanDuel, and such. But so if I understand correctly, the regional sports networks, when Disney bought a lot of the assets from Fox News Corp, they had to relinquish themselves of the regional sports networks. Do I have that right? And that's when Sinclair bought?
You're right on the button, but let me give it to you in another way.
Okay.
I'm watching a football game. Let's assume it's the Chiefs against the Bucks. And Tampa Bay, the last 2 minutes, I have to see what's going to happen. Are they going to score another touchdown? Are they going to narrow the score? And I can put, not an in-game betting, but I did put a bet on the game. I had a bet on the under and over. So I'm going to stay tuned. That means more eyeballs, more advertising, getting more visibility. And so that is helping the entire ecosystem of the gambling. And now regional sports is owned by Sinclair. Sinclair is about an 85 million share stock with a $32 price, and they will benefit from a resurgence in sports. And they did a deal with Bally's. Bally's is run by a guy by the name of Sue Kim. He's done a good job. And that stock is 60, and they got a lot of free stock at $30 a share. So they're making money on that. But by the way, Warren Buffett just cut a deal with Scripps for the same thing. He lent them money, got penny warrants. So he's going to wind up owning 24 million shares of Scripps, SSP, which is an $18 stock.
When it comes to television advertising for sports, I know the NFL for the last 4 years, the ratings have been fluctuating. Last year was bad. The year before that, it went up a little bit, but 3 years ago, it was down. The Super Bowl was down the lowest since 2007. Are you concerned any for advertising rates for sporting events?
The question is, how much of the impact from the social dynamics has viewing been hurt? Or on the other side, if I go to a football game, am I going to get more passionate about attending again? So attendance also is a function of a lot of dynamics, and we will see in 2 years. I mean, in 1919, when we had the pandemic from the Spanish flu at that time, baseball attendance did not do well. The following 2 years, it just went straight up. So what other precedents do we have? We'll see. We've got, for example, in New York, they're opening up the Madison Square Garden now to a 20% attendance. If they normally have 20,000, that's 4,000 people. And, the product will sell. I'm not so concerned about attendance. I don't think the advertiser wants to avoid these huge major events. Not an issue. I think there are other issues that may come to play.
I understand. Mario, with about a minute we have left, I have a question about if you had X amount of dollars and you had media stocks such as Viacom. I know I like your analogy always when there's a merger, two companies get together, they have a love affair, okay? Well, Viacom had a divorce from CBS, and then they got back, they kissed and made up. So if you had Viacom CBS, or you've got Disney, or you have Netflix, and you had just X amount of dollars, do you have one media company you like more than another to put your money?
It's a very uncomplicated. Okay. What does the consumer want? What device? How do you give it to them at the lowest cost to the consumer, and how do you do it at the lowest cost to produce it? So the ownership of content and decoupling that with a direct to the consumer is clearly on a global basis. We only have 330 million people in the United States. There's 7 billion more. So when Spotify, which is music, so I like the content producers to music, because they're getting a recurring revenue. There are only 3 of them that work. They're Vivendi, which owns Universal Music Group, Sony Music, and obviously Warner, which went public. So I like that, Andre, but also I have no problem in continuing to own those companies that are selling at a reasonable valuation. And I'm not going to pick one, but I like a basket of them. And then the third part is fairly uncomplicated. What you just witnessed in your backyard in Texas in terms of the freezing of the wind
turbines and the windmills,
turbines and the windmills, we need, and if we have these problems in Iran, and they try to do something strange in the Middle East, and price of oil goes up to $100 a barrel because of a blow up in something, we need to have a reserve, because they become a defense play. So we need to make sure that we are transitioning slowly and have nat gas as a intermediate fuel. There's a lot going on. It's a beautiful world to make mistakes.
It sure is. Mario, I've got so many more questions and so little time. You know the world of television. I hope you come back and join us again. I hope you join us.
Well, thank you for all you're doing, and good questions, and look forward to saying hello again.
Thank you, Mario. Well, in business news this week, the Center for Disease Control released sobering statistics this week and stated that life expectancy declined in the first half of 2020. In 2019, life expectancy was at 78.8 years, and in the first half of 2020, it had decreased by 1 year to 77.8 years. For minorities, the numbers are even worse. The rate was a minus 2.7 years for African Americans and a minus 1.9 years for Hispanics. They said the COVID virus was directly related to the decline in not just African American and the Hispanic communities, but overall as well. In addition to COVID virus is the rise in drug overdose deaths unrelated to the COVID-19. And Saudi Arabia is cutting 1 million barrels a day of their supply of oil. This week they have said that they may resume the 1 million barrels, but this increase will not start until April of this year, given the Saudis already have committed to the cuts through March. Couple this with the weather conditions this week in Texas and many southern states, causing the region and the state of Texas to experience energy blackouts due to the severe cold weather. Texas cities of Austin, Houston, and San Antonio are under boil water notices throughout the weekend until Monday. Well, think about this. Mary Barra, the CEO of General Motors, has said GM will be selling all electric vehicles by 2035. Well, that's just 14 years from now. Ford, Chrysler, and other major companies are right behind GM. A question: if the current power grid of Texas cannot handle a few nights of 20-degree temperatures without blackouts, how will they be able to plug 100 million electric cars in overnight and have them fully charged for the morning? Well, Texas is the energy capital of the United States. Well, that may not come as a surprise, but in addition, which may surprise, Texas is also the wind capital of the United States. Yep, 23% of Texas's power comes from wind and solar. Texas officials are saying due to the frigid temperatures, oil wells are shutting down, making it too cold to pump oil or natural gas. Approximately 3 million barrels a day is currently offline, bringing oil above $60 a barrel. At the height of the freeze this week, over 4 million homes in Texas were without power. This week, and as of the evening, still about 200,000 Texan homes are still without power. Texas is restricting the sale of natural gas outside of their state. OPEC expects world consumption of oil to rise by 4.7 million barrels a day in the fourth quarter of 2021, compared with the first 3 quarters of this year, amid the economic recovery. Well, as of the close of business, oil closed at $58.97 per barrel. And this is a good time to tell you my guest next week will be the former CEO and president of Shell Oil, John Hofmeister. Well, SpaceX, the brainchild of Elon Musk, is now worth about $74 billion after completion of a new funding round. SpaceX said that they plan to take 4 private individuals into space, dubbed the first all-civilian crew, by the fourth quarter of this year, 2021. SpaceX raised $850 million last week, putting its value at 60% higher than it was last August. And Warren Buffett's Berkshire Hathaway released their fourth quarter moves, and some big names were added and some positions were closed. Berkshire Hathaway added to their portfolio of stocks Chevron, Verizon, Marsh & McLennan, Merck, and Kroger. Berkshire also trimmed its lucrative position in Apple a cut of 6%. Apple still remains the largest equity holding in the company. It also continued to trim its positions in financials and completely closed out its J.P. Morgan as well as PNC Financial, and it cut its stake of Wells Fargo by 60%. Berkshire Hathaway closed their relatively new position of Barrick Gold, so some may read the tea leaves and get an idea that what Warren is thinking. I do want to remind our viewers that a few years ago, Warren Buffett added Todd Combs and Ted Weschler to approve the buying and selling in Berkshire's massive portfolio. So some of these new additions or deletions could have been done not by Warren Buffett's Berkshire's, but there are 2 new traders, and Berkshire Hathaway B-Class closed today at $241.85 a share. The Federal Reserve released this week the minutes of their last meeting on January 26th and 27, in which they unanimously agreed to hold interest rates to near 0% for at least the foreseeable future. Well, most of them thought that the $900 billion federal stimulus package approved last December, along with the likelihood of more fiscal support and continued vaccine distribution, would lead to a sizable boost in activity for the year. Economic reports released since January 26th meeting show that the recovery picked up this year as consumers used stimulus checks to boost retail spending, manufacturers continued to increase output, and employers resumed hiring. It was agreed to keep the interest rates to near 0 until its goal of lower unemployment and a 2% inflation rate are achieved. It's a delicate balance because of the inflation that we saw in the 1970s. 3 major retailers announced changes on labor fronts yesterday. Walmart is for their 425,000 store associates following a successful holiday season. Depending on location, wages will bump up to $13 to $19 per hour. With the increase, almost half of Walmart's U.S. employees will be earning $15 an hour or more. Walmart's $11 an hour starting wage will not be budging up for now, even though competitors including Amazon, Target, and Costco have increased theirs to $15 an hour. Kroger, in some Seattle stores, is going to be closing some of those Seattle stores to a new city ordinance requiring $4 an hour hazardous pay for frontline grocery workers. Kroger had hero pay when the pandemic began, then switched to a one-time bonus of up to $400. In addition to the store closures in Seattle, Kroger is also closing 2 stores in California, where a handful of cities have passed similar measures. California's Grocers Association is fighting these rules. And McDonald's is their executive vice president bonuses is tying their pay to diversity targets. The fast food chain wants to improve representation in senior leadership to 45% women and 35% minorities by 2025. Well, what's happening with Bitcoin? 12 years ago, Bitcoin was just an idea. Now it's worth as much as a tiny house. Well, this week, the world's largest cryptocurrency briefly surpassed $50,000 for the first time ever, extending a run that's, well, mesmerizing the business world and frustrating your friends who may have sold all of their Bitcoin back in 2019. Well, how did we get here? In 2008, Satoshi Nakamoto published a Bitcoin white paper that laid out the principles of a new electronic cash system that's fully peer-to-peer with no trusted third party. Well, to this day, no one knows who or what group of people Satoshi Nakamoto is. In 2017, JP Morgan's CEO Jamie Dimon called Bitcoin a fraud, a comment he later walked back on. And in 2018, the New York Times ran an article with the headline, "Everyone is getting hilariously rich from Bitcoin, and you're not." Well, things stopped quite so hilarious in 2018 when Bitcoin crashed down to 3,200 from its high of over 19,000. And then in 2020 to 2021, after hovering below 10,000 for months, Bitcoin refueled its rocket ship. It already up about 75% this year alone. And finally, one more item about a story we did earlier about Bitcoin and thought we would end the show with this. A computer programmer in 2010 bought 2 pizzas, and the pizzeria agreed to accept 10,000 Bitcoin for payment, which will probably go down as the most expensive pizza transaction ever. So let's just assume there were 16 slices between the 2 pizza pies, and you take 15 bites per slice. Well, at today's price of over $50,000 per Bitcoin, that's about $2 million per bite. I don't have any information if that included for extra toppings or did that include the tip, but chew on that for a moment. Well, that's our show, and hope you've enjoyed it for this Friday, February 19th, and we thank you for inviting us into your living rooms. We'll be back next week. In fact, remember our guest next week will be former president of Shell, John Hoffmeister. Remember, you can follow us on Facebook and WYES.org. So, thank you for watching us. I'm Andre Laborde for Wall Street Wrap Up. Remember, money never sleeps. Good night.